What does diversifying mean for you? Good morning, Russ.
Well, for us, it's, firstly, just, I'm traditionally just a US-based investor, and we get our international exposure through like big cap tech and other consumer companies that are global like Apple. So we've always done substantially better for our clients investing in US companies than foreign companies. But for the first time in like at least it's maybe 8-10 years, I'm investing in Europe and in Asia. And I think there's a lot of opportunities globally. And if you actually look at the global markets, they're all pretty much up except for the United States. So this has been a good way to diversify assets if you want to own stocks. But in general, stocks as an asset, I think, have a much higher risk level for the return that you can earn than it's had in the last 5 years. And so investors need to look at diversifying in other areas like gold and Bitcoin, from the sense of having alternative assets. Real estate and REITs look interesting to me here, as well as private investments.
Let's talk about Europe and the equity market, if we can, because I think like ASML is a really interesting example, right? It is the sort of darling of Europe, but it is right at the center of what is happening with tariffs and the adjustment of global supply chains. I also asked the team to show SAP because there isn't much big tech out there in Europe. And I kind of have a right to say that, having spent most of my life and career in Europe.
And you have Siemens too. So we looked at SAP and Siemens recently, which are excellent companies. And the way we're playing it right now, because I'm not really an expert in European securities like US securities, is really just through the indexes, which I think give you exposure, because SAP and Siemens, Novo, which is really cheap as well, are all big components of the European indexes. So that's one way to play it. I own ASML in my fund GK and for clients, and we just trimmed it a little bit because I kind of feel like they're just in this crossroads of the trade war, because they make the most important machines for chips, but it's also like, we don't want this person to get it, we don't want that person to get it. So ASML has some challenges that are political, but their product is crucial to the development of advanced chips.
Bitcoin, you mentioned a moment ago. Is there a kind of Gerber Kawasaki thesis and strategy around Bitcoin, Ross?
Well, I've been investing in Bitcoin for over a decade. So for me, Bitcoin is a long-term, highly volatile asset that's related to risk. And so when risk on, Bitcoin goes up. When risk off, Bitcoin goes down. But we look at it very similar to gold, but gold acts opposite of Bitcoin, with inflation, and it's a risk off asset. So we like them kind of paired. In my fund, I own, a much higher percentage of gold now than Bitcoin, because I think gold is a better bet today than Bitcoin. But I think having alternative assets like this in your portfolio makes a lot of sense. And we have it in my ETF GK, and we're the only ETF that actually owns gold and Bitcoin.
Ross, I'm going to ask you about Tesla. But first, I just observed that historically, when you've come on the program, we've talked about Tesla because you have been a vocal Tesla shareholder. And when I posted on social media you were coming on, there are many that point out, well, why are you getting him on? He is too emotional. I'm quoting others. Just hear me out. He's too emotional about Tesla. He is anti-Elon. There are those that sort of think you're too combative with the sort of retail Tesla shareholder and audience. That's the context. But actually, there are some specific questions in that, which is, how focused are you on Elon's involvement at Doge and the assumption that you probably want him to stop doing that and focus back on Tesla?
Well, there's a couple of things to unpack there. First of all, I understand why retail investors at Tesla are frustrated with me for voicing my views as a retail Tesla investor and a Cybertruck driver. I find it horrible, the fact that people are worried about having their vehicles vandalized, including me, because of Elon. So I don't know why I'm getting attacked when I'm actually really getting attacked because of Elon's behavior. So I think you'd have to be a blind person not to see that Elon's behavior is, highly political and highly damaging to the brand, and all the numbers are showing that. So I'm a shareholder, and if you go back to 2021, that was the high of Tesla at around $400 until that brief rally during the election. So nobody's made any money in Tesla for a long time. Tesla stock is down 40% this year. The performance is, I think, directly related to the CEO, A, not working at the company, and B, his outside activities, I guess you could call it. I don't like Elon's the way he does things. That's true. And I don't align with him morally. But that is irrelevant of my investment in Tesla, which I have a substantial amount of money in for my clients that deserve correct representation by their CEO and the board of directors' responsibility to running the company as every other company in America is run. So we all know that this is a reality, and I'm just the one willing to say it. So people can attack me all they want, but what I really care about is what's best for Tesla and Tesla's shareholders. And if these people don't get it, they don't get it. What am I going to do?
Another question is, well, what happens if Tesla outperforms? One user on X gave the example of what if it 10x's? I think a more modest model, but your open-mindedness to add to the position and continue to see the long-term story around AI and energy.
I still own Tesla. Like, you know, we own a lot of Tesla at my firm, a lot less in my fund because I think the short term and the medium term look pretty bad for Tesla right now. But we still even own it in my fund, and I can't really even justify owning it. But for clients, we own Tesla because I do think something fixes itself at some point, and they have the best products. I was just in the new Model Y. It's a great upgrade. It's way better than the old Model Y. And why they're not advertising to consumers that they have a new product is mind-blowing to me. So I've had enough of the BS that Elon knows what he's doing at Tesla. It's clear that he just doesn't care. And his next move is XAI. And by the way, I'm invested in that too. So, you know, I own XAI stock. And the truth of the matter is Elon's going back to XAI. So if you have any confusion that he's coming back to Tesla, he's not. That's not what his passion or focus is. And there's a great article from, I think, the Information that came out today about basically he just doesn't care. And I believe that. So I'm sorry, I'm going to stand up for Tesla because I care about climate. I just survived a horrible fire that was created by climate. And I can tell you firsthand, after seeing it and fighting it myself, that if you're not concerned about what climate change is going to do to you, you're just being foolish here. And Tesla is one of the most important companies to solving climate. So I want to see Tesla succeed. And that is the whole purpose of why I say these things and get criticized.
I don't mean to cut you off. We're just short on time. Okay. I want to get to Netflix and I want to get to Disney.
But I am emotional about it because I love Tesla.
Noted. You've been a holder of Disney. We talked about it a lot, but that Netflix news on their 2030 targets, how do you see both names?
You know, it's funny because I fight about Disney all the time with my coworkers because I still think Disney is wildly undervalued. And after the Netflix announcement, you know, we own Netflix as a top holding in my fund and at my firm, and we've owned it for a long time, and it's been a great investment. And the team there is incredible, and their goals are, I think, great and accurate, and it's a great stock to own. But then you look at Disney trading at this like discount with Hulu really doing well. You know, Hulu has great content. ESPN is about to become a free agent from the cable companies this year, where it can be a standalone service. They have these sports services coming out. They've done very well, I think, with movies. Not as good as I'd wish, but much better than before. And then theme parks and I think there's this global uncertainty with travel, which is why we've lowered our position a little bit. And I'm not sure how this shakes out with China because Disney and China have a very close relationship. So there are some headwinds with Disney that Netflix doesn't have because they don't have physical, you know, locations. But with Disney and the cruise ships, I see this as a cash cow. So I'm really bullish on Disney. I think the valuation is way cheap, but I'm also very bullish on Netflix.